Subscribe to our YouTube channel and press the bell icon to get the latest updates.
Hello viewers, welcome to the Fast Profits Daily. Myself Brijesh Bhatia. Well, the talk of the town is the US inflation, which has hit 8.6%. The data released on Friday, and it has been on the high of 40 years, which we saw in 1981, and the inflation is back above 8.5% since 41 years now. If I just look at the CPI components over here, interesting is if you look at the energy, where the crude has seen a huge rally, natural gas has seen a huge rally, heating oil, gasoline, all have seen a huge rally. And if I look at the CPI component energy, which is around 35% up in last 1 year, and this is the largest 12 months increase in last 17 years, which is again when we saw crude prices, if you remember, testing around $140 mark. At this time, we have seen energy component into the CPI been going higher. Food inflation again has been higher, where we have seen agri commodities heading higher and higher. And if you remember, I've done a Thomson Reuters commodity index where I have highlighted that it's been trending at multi-year highs. 41% is the component of agri and agri products into the Thomson Reuters commodity index, which is also trending higher. And if I look at the food index, food component to the CPI, it's 10.1%. First time it has crossed 10% since March 1981. So again, it was largely led by the food and energy into the CPI if you look at the momentum. Secondly, if I look at what has inflation data done is it has put pressure on equities, which was trending into the fear as well, and now the momentum is back onto the downside, where the traders feel that the rising inflation could put more pressure into the equities. We have seen Dow correcting 80 points on Friday, followed by selling pressure coming on to the in this week on Monday and Tuesday as well, and it has put effect onto the global equity markets as well. So we have seen Nifty correcting back to the 46 weeks low now, where we hit the 15,659, the new low, which was 15,671 was the previous low. And again, the momentum is bearish. But what about gold? It is known, it is said that the best hedge against inflation is the gold. But should you buy the gold at the rising inflation? Let's look at the chart where I have highlighted the gold prices against the inflation. So now if you look at the chart over here, let's look at back in 1975, 1981, where the inflation was roaring higher and higher. Gold prices, above the blue lines, which are on the upside, and the downside, the orange line, is the inflation. So if you look at the rising inflation, yes, at that point of time, gold was a huge, has seen a huge rally and one of the best hedge against the inflation. But if I look at the post 1981, look at the data. Whenever inflation data goes around 1 or goes below 1, when it tests around 1, it is the best time to invest into the gold. So if you look at the black arrows over here, the dashed lines, if you look at the inflation when it testing around 1 level, if you look at the inflation orange line, where I have marked the horizontal line, which is the 1% onto the inflation. So whenever it tests 1, it gives an excellent opportunity for gold investors to look at investing into the gold. So not once, if you look at the 1987, where inflation was tested at around 1, gold have seen upside rally. And I'm not looking at 10%, 15% rally. This rally has been more than 35% whenever the inflation has been testing around 1%. So if you look back in 2002, 2001, 2002, we saw inflation testing 1. That point was the time when the gold rally actually started. The multi-year rally has been started back in 2006, back in 2008. Again, we saw a financial crisis in 2008, where inflation went below 1%. But if you look at the gold rally, was continuing when inflation was testing 1. So again, back in 2020, when inflation was below 1, we have seen a gold rally. So the point to highlight over here is yes, gold is best against hedge against the inflation. We have seen only once when the inflation rose above 6.5% and gold rallies. But if you look at the most of the data where gold inflation was at the lower level, and after 40 years we are witnessing. But is if you look at the gold momentum right now, it is up even after the data when it has seen an uptick above 7.5-8%. Gold has been steadily trending between $1,700-$1,900 for quite some time now. So we haven't seen such interest into the gold accumulation as an hedge against the inflation in the recent times. But the historical data as of now, it seems that whenever the inflation tests 1%, it is the best time to look for a gold as an investment. I'm not looking as an hedge, but at current point of time, if this is not the time for gold, when it will be, because inflation is trending higher and higher. And I believe there are various opportunities now. And back in 1975, 1981, I think gold was only again the asset class apart from equities, which was probably the liquid one. I would not say the futures trading or the spot, but if you look at the physical market, gold was one which was available to hedge. At current point of time, I'm not sure that whether investors are looking just an hedge for against their equities or against their other asset class. But if you look at the forex and bond market, which have been very liquid for quite long now, creating a cushion of opportunities for hedge against inflation now. So I believe it is not a good time to hedge against the inflation for looking at the gold prices. But definitely gold is very bullish, and I foresee probably back to the new all-time highs. But at current scenario, I would stay slightly skeptical into the gold and look for 1650, 1700 levels as an gold as an investment, looking for back towards new all-time highs. Signing off, Brijesh Bhatia.